What's going on YouTube? So let me get my chart set up. I think I have my charts displayed. Yes, I do. Not really much to go off of this week. I mean, I guess you could say there's a lot to go off of, but at the same time, there's not because everything we've discussed up until this point, it hasn't been accurate, but it's still been to our overall directional bias on what we were expecting with the market. Now, yesterday I had dropped, not yesterday, it might have been yesterday. I know Tuesday we do market forecast. So I think I dropped market forecast yesterday. Let me go ahead and back out real quick. Hold on. So this was our move from yesterday for US 30. If you're tuning into this YouTube, you know our main focus, our indices. We do discuss other currency pairs, but we try to stay where the money is moving. Not to mention indices go off of the stock market as well. So if you're a stock trader or a stock well, if you're an investor in general, I feel like, if you're doing foreign exchange trading, obviously you want to be geared, and you're doing stock investing, you want to be geared towards indices because that could just put you in the right direction for a lot of other opportunities within the stock market. But anyway, outside of that, this was our move yesterday, right? So this was our bull move yesterday, and I'm gonna break it down a little bit further as we go into these other currency pairs. So yesterday, what did we have? We had FOMC minutes, which normally is just like an article that's dropped out. They do tend to have some sort of conversation after, but unless somebody from the Federal Reserve is talking, I kind of ignore that and I go off of what the report was telling me, which, like I don't use the report to identify like a bias. I just care that, okay, what the report did to the market after the market came out. I mean, before the report came out, we were already bullish, but that just added more incentive for the market to continue to rally, which we saw yesterday. So what we should normally expect anytime you're looking at like a daily break or you're looking for a price to continue in whatever direction and it's off of the daily time frame, we should expect that the market might try to pull back a percentage. So you could say 50%, you can say half of one candle and stuff, but normally when the market's going to pull back, it's going to pull back out of the area that it broke out of, which is normally resistance. If we're looking for buys, we want the market to break out of resistance and come back and test said resistance. Yesterday, we had a breakout and then the market continued. And then I think it was like at pre-New York, maybe like around like anywhere like 6 a.m., 7 a.m. this morning, Eastern time, the market actually, after building resistance, it pushed down in order to do what? Test the high that it broken out of. Now, we have a recipe that we follow that I believe every trader that follows indices should be. If you're looking for buys, opening bell should bring you down. So how many traders get, beat up because they're expecting, well, they're jumping in like 2 minutes, 30 seconds, three before opening bell because of what it's showing you. Opening bell, we should expect the market to come down. Now, we should expect it to come down to some sort of structure, which would either be like a break of resistance or if we were selling a break of support. But again, you don't know where it's landing the zone at. So the expectation is that, okay, I should expect opening bell to sell off, bring me down to a level of structure, some form of high structure that the market is trying to look at. I mean, the market's trying to bounce off of, and then continue in that direction, which we did have today. So I don't have my markups now, but where's the move? This was the move that brought us down. So this is opening bell. What's today? Yeah, this was opening bell bringing us down. Now, the one thing that's been going on within indices that I've been noticing is that even though they've been brought down by opening bell and we should expect like the buy up, the market's kind of been buying kind of been selling off the whole day, so the whole trading session. So until we get a break of this high, we can't yet say that price is buying up. But based off of the recipe, which we know opening bell should bring us down if we're looking for buy opportunities, it looks like it's playing out exactly the way we want to see. But we do need breaks of structure. The only reason I say that is because remember, within indices, the market can test, price can test as many times as it wants to, especially when it's leaving like liquidity points like this, such as like long wicks. It is followed by like, it has structure, like a strong point of structure as far as like a strong body of this candle. So I'm still thinking that price is buying up from here, but I'm just, putting out, being cautious as a trader. You know what I'm saying? Being cautious. We've had all this manipulation. Now, today, because today's Thursday, this isn't a day to be scary. I said be cautious, not be scary. There's a lot of traders that have been waiting for this move that, because the market has been going up and down, trying to push down slightly further, now your brain is racked. You know what I'm saying? You're like, man, I don't want this thing to come back again. Listen, if this thing is going to come down, it's going to come down. But at the same token, we shouldn't see that based off of market structure. We can see price test certain areas like multiple times, but we shouldn't see price trying to make a big move to the downside because we already broke structure yesterday, not to mention what we created. So I'm going to break it down to like the 1 minute without using my markups because that's exactly where price actually ended up creating, was it the 1 minute? No, it was the 1 second, but it's down here. It was down here that I was looking at it right here. So this is where you go into identifying like basic trading I mean, not basic trading pattern, but basic trading. I mean, that's really what it is. Basic forms of structure. So when you're identifying support, resistance, these things still are true when you're analyzing the market, right? So right here, you may not care about a W pattern because you're evolved for that, but a W pattern presents a buying opportunity. That's pretty much giving you that buyers are within the market. Now, in order for that to be true, we obviously need price to break out of some form of resistance. Now, for me, I don't look at this as like a W pattern because I feel like that's just too generic. I look at it as a more, I guess, advanced view, which would be a double bottom. So right here, we finally have a double bottom. Now, the important thing is you have to know this basic stuff as a trader. The smaller time frames are where the reversals happen, but we end up seeing it on the higher time frames. You know what I'm saying? So if you're not keen to like looking at the market like on the smallest time frame possible, you're going to miss opportunities like this. Now, don't restrict yourself to saying, man, I'm looking at, only smaller time frames because that's kind of insane. Don't misinterpret what I'm saying. You basically have to scale in, scale out, right? So yesterday we had a buying opportunity once price created support. So even if you don't know this is a double bottom or this is a W pattern, all you should care about is that price created support. And as you scale in on different time frames, that support might slightly look different. But either way, what I saw, that's what I was trying to see, if they were equal to each other. So you see how on the 3 minute, it wasn't equal. It actually looked like this low was like a high tested. There was probably like a wick because we have it in a line chart format. So this is support. They're almost equal to each other. So this was the support that pushed us up. Now let's look at where price pushed down today. So that's why I always go to a line chart because a line chart shows you the true structure. If you see that there's no dip and you have a candle like that's down here on your chart, but you're saying that the line chart hasn't actually shown a dip, then that basically tells you that this currency pair has a lot more opportunity to go down lower. You want to see dips like this on smaller and higher time frames, right? You want to scale out. So when we go to the hour, we don't see it in that visual, but we know that there's a wick down there. But we still see some form of structure. We do see a dip. Yep, 3 hour. And I'm just scaling between different time frames. So you see on the 4 hour, we no longer see that, right? We no longer see that dip. Okay. And that's what I was saying, which means that because of how this candle formed, the market has a lot of opportunity to still climb down and test this overall wick. Not to mention, well, my markups are going to start showing again. We have imbalance over here. Now, I do want to believe that price collected this imbalance with this wick over here. with this wick, I'm looking at this as possibly price collecting the especially since it's following the recipe, right? Price pushing down to 38% of this imbalanced candle right here. Reason why it's imbalanced is because there's no structure to the right of it. So we normally either need like a wick or a candle. Whenever I see a long wick like this, I'm still kind of hesitant on what price is trying to show us. But like I told you, overall, when we see price get pushed down by opening bell, this is exactly what we wanted to see. So even if it is testing, it might not test this like 100%. It might just, have price play around a percentage of this wick. Let me pull up the fib. Let's see. We can push all the way back down to 786 if price were to do that. That's just me being, cautious a little bit. But again, I do think that this is the low point for today where price will actually rally off of it. It's just what price decides to do after this move. Like again, once I see opening bell bring us down, I'm pretty comfortable unless price starts showing me, different visuals as far as like bearish pressure. As you can see, it's definitely enticing sellers right now to jump in. But this was basically your point of contact for buyers to enter. Now you can keep it simple, like I said, like don't overthink it, you know what I'm saying, because of what the market is doing. Draw a zone, and we know that this was once resistance before price broke out of it. And what makes it support is that if price comes back and tests this area, did we have price test this area today? Based off the 4 hour, yes, you know what I'm saying? Based off of the 1 hour, yes, because this is actually where the structure is. This is just the low point. I actually like what it's showing us on the hour time frame. This is the low point that the market made, but this is the structure. Where's the structure at? The line chart shows you the structure. The wick shows you how far the market traveled. So, you do want to incorporate the wick into your analysis because when you break it down to smaller time frames, that still is like candlesticks. There's still structure within that movement. But based off of like the simplicities of trading, this was consolidation, or even if you didn't know this was consolidation, this was a previous high, right? This area was once resistance. So let's make it red. I know I'm kind of doing teaching while I'm live trading, but this was once resistance. We broke out of this area, and then opening bell brought us down to test set area, but we still need to clear this overall resistance that price has been building up here. But we do have our confirmation that at least give us a lot more confidence that price is actually testing the previous resistance and trying to push up. The only thing is that even though price is probably going to rally off of this area, there's a possibility price may want to come down just because how indices operate, may want to come down here next week. I'm just kind of doing that as a sidebar. I'm not looking at that to happen today because based off of what we've been talking about with this 945 candle, not to mention the consolidation points, like to me, price is still bullish and it actually did its pullback at opening bell this morning. So break of structure, keeping it simple. Of course, the structure is a little high, but the wick brought us down to a low point because if we break it down to the 30-minute, oh, even the 30-minute has a wick. I wanted to see where price might show. Okay. So on the 10-minute is where price is showing that it actually dipped down. And I think that's what we were looking at. Yeah. But until we get a clear break of the, of this resistance that's been made up here, let's make this black and just call it resistance. I don't like having the same color like overlapping each other a lot. So we need price to break this overall area, which I believe that we are, you know what I'm saying? But again, we don't create like these moves in the market. So the one thing that I feel like is bad juju is for you as a trader to be like, oh no, the market definitely is going to do this. You know what I'm saying? Like you already jinxed yourself right there. So this is us still collecting data on seeing what prices do it. Now, on the 10-minute time frame, we do have that V shape that we're looking for, that valley or that dip, you know, by the dip. And it is responding to what? It's an orientation to a previous level of resistance. So resistance we once had, price broke up out of it, and this morning we got brought down, and we can clearly see it on the 10-minute time frame. As we go up to higher time frames, it looks a little bit different. 15 minutes still showing us a dip. 30-minute, we know that there's a wick down here, but this is still structure unless price violates it. This is still support. May sound crazy, but yes, this is still support because we can fact check it on the smaller time frame, even though it's not, the visuals aren't showing us on a higher time frame. This is where it's like you knowing how one, your currency pair operates, but just the fundamentals of trading. You know what I'm saying? Like train your eyes to see, okay, I can count a wick if price has like a strong body behind it. On that 4 hour time frame, it didn't look like a strong body. Like as far as like this formation, this candle's kind of like weak. I mean, this body's kind of weak if you ask me. Not because it's a bear candle, but because it's not as strong as what we saw like on a 10-minute, on the 30-minute time frame to be followed by a wick. So I did say because of how this candle formed, price could continue to try to test this overall area, this overall price zone until, you know, we've tested enough times until price actually breaks to the high. But like I said, my narrative hasn't changed since we've been talking about this. Like I know sellers have been pushing the market down, but overall we have not been selling since we've been buying. Yes, we've been having bearish pressure, but since you look at our activity, like since really, what is this? March. What is this? March. How come that says? Oh, okay, okay. I know why. I know. So March 30th, at the end of, I mean, we already knew that because we were going into the second quarter, but March 30th, since March 30th, we've been on a bull run and we've been playing off of what? That inverted head and shoulder. So anything that's been happening lately has just been the market doing another form of correction. A lot of traders expect one form of correction, which is normally induced by like a giant pullback, right? Where the market like pushes all the way down with the sell, a giant sell candle. Indices doesn't work like that. Now, yes, we've been seeing, and especially like when you're going off of the continuation of a pattern, it's still playing off of this inverted head and shoulder pattern. Now, if you've been following our channel, you know that I talk about that I suck at identifying these. But when price shows us that that's what it's doing, yeah, I'm rolling with that. And since we identified this way back in like end of March or early April, price has still been bullish and been playing to these trend lines that we've been drawing. And even on the violation, the only thing it's been doing is moving sideways. You know what I'm saying? So sideways is still another form of correction within the market. You know what I'm saying? So we know the market. That's why I say like a lot of this stuff is built on the basic foundation of trading. Do you know what an uptrend looks like? Do you know what a downtrend looks like? Do you know what consolidation looks like? Consolidation is another form of a pullback. Well, I wouldn't say a pullback. Consolidation is another form of a correction. A pullback is a correction, but consolidation is also, especially when you're looking at it on a higher time frame, or if you say ranging, you know what I'm saying? It is still another form of a pullback. The only thing we've been doing is ranging here. Now that we have like bullish momentum within this area, a pullback, yeah, I'm looking at us to continue. I know that the market has been like kind of fighting against buyers in order to, you know, one, get sellers to jump in, but also take buyers out of their position. Overall, this market has been bullish. You know what I'm saying? Unless we get like a clear, and this was I said this on market forecast, unless we get like a clear break to the downside, and even then it would have to close like below this area. Like I'm not looking for sales, you know what I'm saying? I'm not even entertaining the idea that the market is going to go below that. Now, if it does, then I respond accordingly, you know what I'm saying? But as far as we're seeing right now, price is still bullish, especially after that move yesterday. You can see that price is creating a doji, which is what? consolidation, like all this stuff matters. You know what I'm saying? Technicals are way stronger than fundamentals. I don't care what any trader's been telling you. I don't care how much money they've been making. Technicals tell the story. It's like reading the pages of the book. You're reading the pages of the market within the technicals and stuff. And a lot of this shit tells you this stuff ahead of time. We've been bullish. So yes, we can add in, oh man, SpaceX just went public yesterday, or we can add in the war stopped or the Strait of Hormuz is open. We can add in all that shit. That's just the trigger in order to catapult or, make the market fall off. You know what I'm saying? The news is just the trigger. It's not creating the direction. The technicals are creating the direction. But yeah, opening bell brought us down. So to me, this would have been your buy zone today. I do think that you could still take a buy zone off of this area. You would just have to be cautious that price may try to, as you can see, push down slightly. But I don't think that we're going any lower. And if we do go low, I'm still thinking that we're testing this high right here. You know what I'm saying? So opening bell did exactly what we expect every time that we're looking for a buy. And again, it could be a lot more vicious. Don't get me wrong. Opening bell hasn't been as clean cut as we would like it to be. Sometimes the push down is so like ferocious that it's like, it looks like that motherfucker is selling. You know what I'm saying? But we still expect it to come down. We just don't know where it lands. But we can still draw areas where price may possibly land. You know what I'm saying? This was a high for yesterday. I knew that price may try to target that. Same thing with S&P. S&P looks a lot different than US 30. I will say that. But S&P is right now struggling. One thing I said about S&P is that I think that S&P and NASDAQ are going to start to range to give US 30 opportunity to catch back up. So we're still playing off of this consolidation zone within S&P. So if anything, I would say that if it's trying to target this consolidation down here, that's probably your buy zone. But I think it's building the support that it needs right now in order for a price to buy up. What time is it? 10:24. We've already passed 9:45. Let me see this with US 30. I want to identify. Let's do this live. See if it matters today. There was a lot more news. So whenever there's a lot, okay. So whenever there's a lot more news, obviously, it's not going to be a clear trend, but this is me boxing up our 9:45 candle, right? And I'll make it green on the 15-minute time frame. It has to be on the 15-minute time frame. This is literally free game right here. You know what I'm saying? So we can see that it doesn't matter what candle it produced. Like ignore the I mean, yes, still read the charts, but ignore what candle it produced if you're using this technique. You know what I'm saying? I do not want to say strategy. I know how I feel about that. But anyway, box up this candle and kind of stretch it, because what you're doing is seeing how price reacts within this candle. It could bounce back and forth. It did that within this 15-minute candle that was produced on, this 9:45 candle that was produced on this Tuesday. So as you can see, price like pushed up, it played within the zone, and I had to keep extending it to see how far until it broke out. You know what I'm saying? That's like what the design of the 9:45 candle is supposed to allow you to do. It's not giving you a sense of direction. It's allowing you, well, it is. After price breaks up out of that zone, you at least know the direction either for that trading day or the rest of that trading week. You know what I'm saying? So yesterday, we finally had our breakout of this area. We should expect that price may try to test the 9:45 candle, come back and do a pullback if it's not doing a correction. So it didn't come all the way back into this 9:45 candle. It actually came back into the one that was made on the day before. Actually, yeah. So Monday. So yeah, Monday. It actually came back to Monday's 9:45 candle, which kind of has me, which kind of leads me to believe that there could be a possibility where price shoots up, gets us all comfortable going high, and then come back and try to attack this 9:45 candle to test this high, since really we were testing Monday's 9:45 candle. You know what I'm saying? So box up your 9:45 candle on a 15-minute time frame. Leave the zone there. See how price reacts. If it breaks up out of there, we should expect some type of pullback. You know what I'm saying? That'll push us either back into the zone or the high of the zone, you know what I'm saying, of this structure that you're making. And then you can just take another buy. So you get a break. Price may want to push down to validate that, yes, I'm buying. Then you get a second opportunity for another buy. So the high of this zone could still be your buy entry, you know what I'm saying, within the 945 candle. So once we get a clear break of structure, I would still, I would even send a, for me, with my experience, like I would even set a pending order, which I actually may do once I see that we break up out of this resistance. But that's just, I only use this with US 30. I haven't fact checked it with Nasdaq and S&P. No, actually I did. I started using it with Nasdaq this year, but because I don't trade Nasdaq, I just use it for my long-term investments. I wasn't like, gauged on like trying to perfect it. But with US 30, obviously I'm trying to make this something that we can collectively use. And again, you want to make your trading easier. You don't want to make it like where you got to think so much because that's very draining and very taxing on your body and your mental. But anyway, so right now we're seeing that. Don't get happy just because we're seeing this 15-minute time frame. We want to see moves like this. So to me, this does look like a pullback in orientation to the 945 candle that was produced. So we should see a continuation and then possibly closer to like, I don't know, noon or maybe heading into like 1 o'clock, 2 o'clock, we might get a pullback after we get a break. If we don't get a pullback, then the market is definitely lining us up to come back and test this area, which is fine. But just be in preparation that as you're continuing to buy high each time, the market is definitely recognizing that you're doing that, and it's going to try to push the market down to an area that you weren't expecting it to come back to, just because of how aggressive the momentum was. So I'm still looking at buys. Like I'm not changing my narrative. Like the only thing is like where our entry is at. Like I haven't changed that. You know what I'm saying? Since we started being on a bull run for Q2, like I haven't changed that. The only issues is your execution, how well you enter the trade, and are you patient enough and disciplined enough to enter without like, I know how the market be running, like even today for the sell opportunity before opening bell, the market was straight selling. So think about how many sellers were like, oh man, I know this thing is pushing down. And then as soon as it didn't do it as soon as 930 came out, but we got pushed down more. And then by the time, let me see exactly where we turned around at. We built resistance, 945. If anything, I would say 940. So 940 is where we turned around. So there was a lot of sellers saw that move, was like, oh man, straight to the downside, or expecting it to come back and test areas again. And what did the market do? Flip. I'm telling you, there's some science behind this shit. Like we expect it to come down. We just don't know where the landing point is. But we can set up parameters, or we can set up data points where we expect the market to actually, bounce off of or sell off on. And this is like as simple as you can keep it. This was a break of structure, which this was resistance. Market came back, tested, and then now we're rallying right now. So yeah, that's really what it is, traders. The only thing is like I said, don't get so wrapped up into your buys that you ignore that there's a possibility that price may try to shoot up. You know what I'm saying? Get you comfortable. You're like, oh, it may even go all the way up to 51. Let's do a bank number. 51 250. That's 265. You get the idea. And then do one of these numbers. And then slow build and then finally go back up. So yes, indices definitely works like that. You know what I'm saying? And I'm telling you because I've been on the receiving end of watching this happen. So it kind of operates in phases. So I mean I haven't like named phases, or I don't have any like definitions for these phases, but yeah, something to this effect. If we put it in our minds, we can be prepared for it. You know what I'm saying? Like again, technicals tell a lot more. So of course, once there's any more news like funneled in the market, I'll obviously adjust fire if need be. You know what I'm saying? Because there are things that could, you know, hey, the Strait of Hormuz is freaking Hormuz. I'm saying it right, Hormuz. I think I'm saying Hormuz, Hormuz. I'm gonna correct myself. But anyway, the Strait of Hormuz shuts down. You know what I mean? It's blocked off again or whatnot. That's obviously some type of manipulation that could bring down the market and stuff. And I'm just saying this as like a hypothetical. I'm not saying that that's what's going to happen if that was announced, which I don't think. But yeah, that could possibly, those type of fundamentals could possibly like add in like a volatility spike, whether it's up or down, but it's not going to change the direction of the market. You know what I'm saying? So it's like if your entry is off, that doesn't mean that your directional bias is off. You see what I'm saying? But yeah, I'm looking at a continuation from here. I like the buy. Like if you had caught the buy in the zone, I like that because that puts you closer to the bottom of where opening bell actually turned around. So yeah, straight buy zones from here. Just remember, like you still have pullbacks. You know what I'm saying? Don't think that, oh man, I'm in profit $50, 100, $200. Take your money, re-enter. If the momentum looks like it's continuing, you can re-enter where you're at, or just say, hey, I'm gonna be patient enough to see if price pulls back. If it doesn't, I know how to, re-enter the trade going into like post market or whatever time zone you're trading. Most traders really, to be very strict on like indices, you should only be trying to trade in New York session and then trying to analyze the market maybe like post market and be in preparation for a potential entry around London, and then get out before like New York, and then look for another opportunity within the New York session, if that makes sense. But yeah, we're still seeing what we want to see. I know there's some struggles. It's gonna be like that. This is trading. It's not gonna be clear cut. I don't think that we had anything else major. I haven't looked at Bloomberg since this morning, so I don't think we have anything else major that we need to really be concerned about as far as like economic data is concerned. But so just play to the technicals. Play off of this 945 candle. If the market starts pushing us down, don't always think that, oh man, it's selling, to break this, because as we saw within this 945 candle from Tuesday, it never broke it. And again, high to low, 15-minute time frame, high to low. I captured it on the 15-minute time frame. Even though it, peeked its head up out of like the bottom of it, it never broke. You know what I'm saying? So even if we have one of those scenarios where price is actually, ranging and playing around within this zone, don't get so scared that, oh man, you see it peek its head out, that it's like, oh man, this thing is definitely selling. We have to wait for closes of candles, but I'm still bullish. Like I said, I do think that the high is still a good buy zone, but if you didn't catch opening bell, you would have to still, like, you would want to see a break and then catch the pullback either at the high or somewhere into the zone, which I would still think that it's still going to be like the high of the zone. But do it yourself. You know what I'm saying? Again, this is just something extra to, like, so you don't really have to put so much emphasis on thinking about what's going on. You can be patient enough to say, let me just wait, see if it clears this. Okay, I'll enter on whatever push down it does. If it comes to the high, I'm gonna buy. If it comes, within the zone, I'm still gonna buy. You see what I'm saying? So I hope this helps you traders. Like, I have an appointment to go to, so I was gonna make this very brief. And I mean, we only try to keep this around 30 minutes, because we know that with traders, like, your attention span is short. You know what I mean? Like, let's be honest, overall trading, learning about trading is boring, you know what I'm saying? But it's the stuff that once we're starting to make profit, that's the exciting part. Our results showing up is the exciting part. So I hope everyone is seeing some results this week. I hope everybody been playing to our narrative and our bias, because like I said, it hasn't changed. The only thing that's probably been causing suffering is like how the market has been reacting. We can't control that. We can't control how it shoots up 1 minute, then comes back down. Because trust me, I was like everybody else yesterday, how the market just opening bell brought us down like 100% of this move, which was fucking crazy to me. You know what I'm saying? I can't predict that. The only thing I know is that opening bell is going to bring us down. So hopes everybody has a successful week in the market. I hope y'all have been having a successful week in the market, and I hope it's to the moon from here, yo. That's what I'm looking at. So I will catch y'all on the next video with Digital Goatz Academy. I'm Antoine Ferrer, as always, trader, signing off. Peace.